Guys, weekly market outlook today on Saturday, the 30th of May, one of the last trading days, obviously, for cryptos in the month of May, and the equity markets leading crypto to further correction. This is the big question. The correction in equities, at least, is kind of causing the crypto space to be at interesting levels. So we'll examine the crypto markets. We'll examine, obviously, news events from this extra upcoming week in regards to, obviously, all potential market moves. And we want to check out what is happening in and with the non-farm payroll data, which is going to kick in markets on Friday this coming week. Let's get started before we waste too much time and have a look on the economic calendar. This week is going to start with next week, with important PMI data from the US. ISM data on Monday, manufacturing-wise, is expected below 50, but which means a contraction, basically. Above 50 would mean expansion. Guys, that's the important story, right? And the important story that this is soft data. Basically, it's not real economic facts. It's something which market participants, in this case, purchasing managers, expects to happen. However, previously 48.7, now up at 49.3 is the expectation. The trend has been rather slightly positive, and somehow it's kind of quite interesting because those figures recently had been better in the US. And on Thursday, if I'm not wrong, we get another on Wednesday it is, ISM Services PMI data kicking in at 52, also higher, and that's gonna mean something interesting. Now, we know that Donald Trump basically stated, hey guys, right now we're gonna increase tariffs on all steel and aluminum imports to the US to kind of get his friends electing him in Pennsylvania a push. But the US seemed to be far from being competitive. So who's going to pay the price in the end? Obviously, American consumers down the road, and they will not be happy facing rising prices. They will not be happy, in particular, with all the current and recent implementation of politics from the US. Let's get further down the road with important data. CPI data from Switzerland, we can look into those, not too much of a momentum. However, jobs openings, JOLTS job openings from the US on Tuesday might move markets slightly. They have usually been one of the important data, obviously, if they kind of remain rather solid. But it looks like at the moment, the uncertainty is the key part. Uncertainty might also lead towards companies kind of employing lesser people. And that's exactly how we see it here from that perspective. JOLTS data might disappoint and might hence also give the US dollar a further negative boost in markets. ADP employment change, that's the preview of the non-farm payroll data, not quite, but often taken as a preview, kicking in 110,000. So these ones had been more or less mixed, similarly to the non-farm payroll data fairly recently. 62,000 previously, 110,000 now. We shall see on how much this is going to give us further input. Let's start with charts, by the way, as well. The euro-dollar currency pair has ended this week extremely positive. So the upside and the month, obviously. The upside here this week, and that's the weekly data, suggesting that a further push higher might occur. This pin bar candlestick might hence obviously kind of develop into another positive candlestick pattern if this is going to be the case, at least, potentially causing the euro to gear up some sort of momentum. And let's have a preview as well. So the ADP data, whatever that means, might move markets. However, stronger data this coming week, stronger data from the US might be a reason for the euro dollar and other currency pairs, but say for the euro dollar to weaken initially, and we could get cheaper entries to the upside buying the euro dollar currency pair at a lower level, for example. So the upside momentum is going to be the key takeaway potentially here, and potentially leading to another push in towards higher price levels, right? So dollar strength kind of causing the euro dollar to move lower. A euro dollar lower, we could enter and buy again at a lower level because the trend in general looks kind of quite solid, and we don't see much of a reason why the euro dollar trend is just changing. US dollar as a safe haven is just not a big story at the moment. The trust into the US government and the bond markets are a big part of that equation right now. Bonds are not in high demand. So basically the government needs to kind of increase the interest on the bonds in order to kind of find to attract buyers who would kind of buy the longer end on the bond market from the US, right? And that's in general something which we see kind of being something important here with the market in general, kind of looking positive moving forward. That zone 112.40, 112.50 has been broken. The market is just looking kind of quite hot here, and all markets are the same. Euro dollar pushing higher. The pound US dollar pushing higher as well. The pound, by the way, had even broken above this recent technical resistance level, and that's the 134 zone. And now the pound US dollar pushing towards higher level, with one exception, and that's currently coming from the Australian US dollar currency pair. Longer term charting patterns suggest the market is going to weaken somehow slightly, but the strong push here might say the uptrend being intact. Early trading days in June, however, quite often cause the markets to reverse. If the trend is up, which it is technically still, we might see that the first days in June, the market weakens, to then see later down the road in June, the upside momentum being kind of quite resumed in the end, right? So upside motivation here looking kind of quite interesting, but the big story, and that's what we see, NASDAQ correcting, S&P 500 correcting, the German, the DAX also lower as well. So we see in general that all indices globally are just facing some current setbacks, and that's exactly what the Australian US dollar currency pair suggests. It's fallen back below this 50 moving average. That's this zone here. And with this capping in idea here, we've seen this before, right? It could mean that the market with some chances even falls further towards lower levels, unless we see the break of the 50 moving average again, unless we see the market breaking the 0.64 price zone, which would obviously kind of tell us that the downside momentum is potentially gonna continue. So that's at least for now the importance here as we see. We got another important news event obviously this coming week, and that's coming from the Bank of Canada. We have the interest rate decision, which is gonna tell us that some interesting story might occur in regards to the Bank of Canada's interest rate decision coming here. We have a rate cut expected, 25 basis points. That's expected. A rate cut usually would harm the currency and weaken the currency. However, if it's expected, we might see short term, the market might weaken somehow. Medium term, it might strengthen again somewhat, right? So at least we see a rate cut would also cause some sort of an impact here in this market. Why? Because rate cuts typically support the economy, and the economy is not out of shape. But if a rate cut occurs, it means it needs more, the economy might need more stimulus, which would be somewhat something negative. In this case, let's observe the market and how it potentially moves on further. And we'll pick the US dollar against the Canadian dollar currency pair, which has kind of basically recently started to break below important zones, and that's such a zone here. That's a strong support area, and that's we're trading now here on the monthly chart, or looking on the monthly chart. That's a very much long-term approach here. Any break below this zone, which is what happened exactly here, might indeed cause the markets to weaken further. What we expect now might be a bit of a pin bar, a bar, kind of a pin, a wick to the upside, and then see that the candlestick pattern might kind of weaken again somehow further. If my skills here somewhat make sense, you can decide later on. We can see how the market potentially later on goes. But downside momentum is clearly the takeaway here. And this downside momentum is what exactly we believe, looking at and focusing on the Canadian dollar. And this equation without Donald Trump might not be won, because is Canada going to be a new state in the US? Jokes aside, likely not. The Canadians are obviously kind of fighting back, at least my Canadian friends in Asia. They obviously say like, what the heck is going on there? In this case, downside motivation here might occur. And as I said, initially the market might strengthen And again, what I said earlier, right? So the first trading days might cause the market to move higher and then it weakens. Something similar happened here. The first trading date of May caused this currency pair to move higher and then it weakened again. And now we could see the same, or if that is not happening, we see directly a bearish market momentum in the US dollar against the loonie, as it's called, the Canadian dollar. Downside motivation, obviously, Canadian dollar remaining rather strong. It looks like, at least currently, the downside might intensify. We see as well the EUROCAD started to weaken further. So there is some setbacks to be seen here, and this looks like another beauty here as well. Maybe if you're keen trading the dollar CAD and or the EUROCAD, splitting positions in two parts, right? So like instead of the full risk, take half risk on both currency pairs if you're keen on this one. And by the way, guys, if you're interested to get to know how we trade this news event here at fxstrategies.asia, just check out our website, tune in and find some ideas which we share obviously with you guys, and we'll discuss markets day in, day out in our WhatsApp group, where you're more than welcome to ask questions to not only myself but to our experienced traders in the group. So that's on that side. EUROCAD looking kind of quite cool to fall further, and with the Canadian dollar's weakness potentially, and not only against the euro but also in the US dollar, as we just examined, we might see the downside motivation potentially gonna increase momentum even further medium term. We got another interest rate decision, and that one is coming from the Eurozone. The European Central Bank as well expected with an interest rate decision. Whether this is going to shake up markets, we shall see. But the ECB is expected as well with a rate cut, refinancing rate down 2.4 to 2.15 percentage points. This is in itself not a big story. And we said again, this could initially, we are looking at the euro US dollar currency pair, harm this token, right? The market might kind of push and pull a little bit lower, sorry, not the token, the currency pair, obviously, towards the 112.40 area. Same story with all the other news we have from the US. Stronger data from the US, market lower. But in general, the upside in the Eurozone and in the Euro in particular looks kind of quite cool. By the way, Eurostoxx 600, the ETF in our portfolio, is also nicely up and hasn't given in some of the gains actually this week. So upside motivation here, initiated by the news event here by the European Central Bank, might be something important and interesting to focus on this coming week. So keep an eye on these news, because they are going to move markets quite likely, and at least give us some important news here moving forward. On Friday, we kick in with the non-farm payroll data, and the non-farm payroll usually also kind of causes markets to be quite volatile, at least if the number, the jobs number, how many new jobs being created, is going to show us a deviation from the general figure. In this case here, what we see is NFP data is expected at 130,000. And again, we kind of can look back to what we've seen in the past, a blend of whatever hit and miss data. The recent one had been extremely strong. Now the impact here, and that's the previous data, right, from the previous month data and from the non-farm payrolls, but that means the tariff story might now show some sort of an impact, right? And this tariff story now might translate towards here some weaker reading whatsoever. However, what we see is that this market is looking kind of quite interesting and important, and might give us some insights into the NASDAQ, which is another way to kind of check out for what the crypto world is going to do. The NASDAQ has a kind of broke some higher levels as we see, right? So the previous highs here 2 weeks ago, basically the week before and last week, or this current week, right, still ending, has caused the market to move somewhat higher. And it doesn't really look overly bad, that's for sure. Looking at it from the daily charting pattern, we can see that the market is though printing and has printed some strong negative pin bar candlestick. And that's a beautiful setup, at least for the ones of us trading the FX market in particular, oil among others. We'll look into this later, but we can see that this zone here, in particular this high point here, which has broken the zone of secondary resistance, gives us for now a lower high. We had a high, and that was the one we've seen here, or like a double top basically, several a month ago, right? And now we have a lower high, and if the market now weakens, we could see an extension all the way to the downside here, which would mark it as at the 20,000 roughly figure. So that a downside slide in this market might be something worth a consideration. So guys, stay tuned on this one here. NASDAQ looking rather slightly more bearish, comparing it with the S&P 500, but both of the markets look kind of quite negative. And even the German DAX has now printed some sort of a corrective pattern on the weekly chart, which looks kind of quite bearish here. The daily chart not doing anything much, but the weekly looking kind of that this market is maybe rolling over. However, a new entry, and that's the previous entry here, previous resistance from a couple of weeks ago, as usual, might now be a nice support area. So take a look into the 23,350 range whatsoever. This zone might not act. Previous resistance, now support, might now act to curb the market from falling further. So that's the importance we see in the regular trading environment here this coming week. Unemployment data, we can just look into this as well, but it has not changed actually anyhow much. Last but not least, crypto space. That's gonna be something of a big and wild discussion in the near future. The crypto space has kind of really not gone any more higher. Bitcoin expected to create another all-time high by several traders. What if this is not gonna happen? Then we could see the impact being kind of quite huge, because currently the market is printing some bearish sentiment, and this bearish sentiment here, as we observe on the Bitcoin chart, might tell us that this current zone here and this current high point here is just something which is just worth a consideration, right? So recent resistance might indeed now act as a support and might be just a matter of time before the market breaks higher. Because if we see the market breaking again the 110,000 level again for a second time, right, we could see the entire train here moving even further to the upside and potentially just causing another push to higher levels. This is needed because retail investors are mostly not in that Bitcoin rally, and altcoins are currently suffering. Altcoin season, not the case at the moment. The majority of inflows are going into the Bitcoin market, but currently in this week we've seen funds flowing out from that area in general, and that's potentially one of the reasons why we would say the correctional pattern at the moment might continue. Looking at it from the MACD indication, it still looks somewhat stable, right? We can't see anything much, still a bit of a rising trend. That's the weekly chart. Daily chart obviously kind of differently looking, but based on the daily chart, again, short term, the market has broken the recent uptrend. That's just something normal in an uptrend, that the uptrend is just kind of not escalating in a straight line, but obviously kind of facing some profit taking with the market motivation and the market movement heading somewhat lower. Bitcoin, again, looking not bad at all for now, and hence obviously we still like the looks of this market potentially generally towards higher levels. Ethereum is just also capped and remains capped below this zone here. There we can observe that obviously this important zone, and that's the one in a form of the 50 moving average, it has not been broken, and now it looks like obviously we still have partly today's Saturday trading and Sunday's trading with the market potentially ready to weaken, could continue and might continue to the downside even further. That's what we see here in this market. At least Ethereum not really cool, at least for now. It's just a bit shaky. XRP even worse. We might say that XRP is just already even looking further. So down the drain, or down the line, not down the drain, down the line in the crypto space, we might see that these markets are going to weaken even further, potentially ready to just break towards lower levels, giving these markets a further push to the downside. And Solana is the key taker. It's the killer here right now. Solana broke below the 50 moving average, and that's really a nice story we see. Well, we have been below and we've tagged it, but now we see that the market is just really not looking beautiful. It looks like the market momentum here is just dying down. Next line in the sand, we've broken this zone. That's the zone we basically kind of went below 160 US dollar. This is now we could see, and I'm eyeing these zones here. By the way, just switch the chart to a line chart and you'll see how you can accurately kind of push in or mark these trend lines. And next lower zones can be seen several, right? 127 among others are the ones just worth a consideration. Guys, with that, that's the most important part here. We'll see that the altcoin season at the moment not happening for now. Well, the markets went higher, but at the moment it looks like we see that the upside remains kind of quite limited. And apart from Bitcoin having moved quite high, the altcoins have not done anything much. Silver and gold, silver sideways, still positively looking. Medium term gold is kind of quite interesting because the shorter term charts, and we traded it a couple of times this week, it remains capped below the high points here and now in a sideways pattern. So hard to see, but a break out of that zone is likely needed, and a breakout from that area might then obviously kind of give us the new direction. Upside looking feasible. The market is still in an uptrend. Downside as well potentially happening. So that's a market here in terms of the gold market, which geopolitical tensions, kind of the Israel story, the Hamas story, the Gaza story, obviously kind of undecided. Russia's attack, Trump kind of said, Putin, what the heck are you doing in the Ukraine, with intensifying the attacks? But we see gold is not giving us any new drama story. Instead, gold rather weakening slightly might tell us that another slide here, first of all, and again, another slide earlier in the month. From this chart, we can't see anything much. So here, from this chart now, we can see a doji candlestick. Maybe we fall further early in June, and then we rise later in June. That's at least an expectation here I might have in this market. So that's in regards to gold. Oil is set to potentially weaken further. The market has been kept below the 50 moving average. This week was a bit of a mess for our trading, at least we have to admit here in the oil market. Nothing much, stopped out at the high point. Now looking for new entries below the low. So again, for our subscribers, we're going to find new entries soon, because the likelihood that this market is going to break the lows kind of quite high. And that's, guys, that's mostly everything what we've talked and checked out so far. Japanese yen looking stronger against the greenback. Dollar Japi looking kind of set to weaken. Maybe some selling opportunities below the lows look kind of quite cool. So we have an array of interesting setups this coming week. And with that, I'd like to release you guys important news events: ADP employment change, non-farm ADP employment change, non-farm payrolls. Take a look into the PMI data as well. Then we have interest rate decision out of Canada. We have interest rate decision out of the Eurozone from the European Central Bank. And I'm not too sure if I've forgotten anything, but I think this is the majority of the data. And with that, guys, I'd like to release you here for now. I wish you another happy weekend. Chat soon and see how next week is going to shape financial markets. Stay tuned. Thanks a lot for tuning in, and I hope you all enjoyed our Jim Rogers video. Yeah, we had a blast, and it's just obviously kicking the road down the can. No, the opposite, obviously, the can down the road. See you later, guys. Take care, everyone. Have a good one. Ciao, ciao.